Erin, Alex, today we're going to talk about long-term insurance. It can be highly technical, very complex, and a minefield for somebody to try and navigate alone. But for most of us, it's actually quite important to have in our portfolio. Alex, let's talk to you a little bit about disability cover. For many, disability cover is a bit of a fear-based purchase, and most people like to think it's never going to happen to me. In fact, South Africans, as we know, are hopelessly underinsured when it comes to disability, although 63% of claims, disability claims, are in relation to South Africans under the age of 55, which is quite frightening. How important is disability cover?
Disability cover is so important. Piggybacking off of Erin's comments regarding disability cover is pertinent to your financial plan. And as you mentioned, disability cover is a benefit we tend to look over, especially compared to life cover. As we all know, death is an inevitable event. Compared to disability, it might not happen, but the risk thereof is still there. How disability cover is so important is that the risk of you not having your income during your working years affects how your financial planning looks at the end. The effect that it may have on your assets is that you may end up utilizing both your fixed assets as well as your investable assets way too early, and this may negatively affect your financial plan at the end.
What we worry about is that the disability doesn't necessarily affect your longevity. So if our client uses up all their retirement funds, as an example, before retirement age, some disability products actually end at age 65. And now the client has used their retirement funds because they weren't adequately secured in terms of protecting their income until retirement age. And now they come a bit undone because they've now undone all maybe the investment planning they've done because they weren't adequately insured for their disability.
Right. So disability cover we use as a broad term, but in fact there's actually the capital disability cover, and then there's the income protection benefit. Alex, can you maybe explain to us the difference between the two?
Of course. With regards to capital disability, it's in its name. It's a disability benefit that provides only upon permanent disability in a form of a lump sum. It's tended to be earmarked towards settling any outstanding debts, such as your bond and vehicle finance, or is even used to supplement your retirement funding should there be a shortfall.
So that was capital disability. Income protection. Talk to us about the different categories there.
So there's normally three categories we look at. You get your own occupation, and you get occupational disability as well as total disability. We primarily focus on own occupational disability, as this benefit will provide you in the event of you not being able to perform in your own designated occupation.
The income protection benefit, there's a difference between a permanent disability and someone who has now had a temporary disability. Can you explain how they pay out?
Insurers, normally what we do is when we put the claim through, we always put it on a temporary basis. This benefit normally pays out to a maximum of 2 years, and thereafter the insurers will reassess that claim whether they need to put that person on a permanent basis.